Hey everyone, and welcome. Your 30s are often called your prime earning years, which sounds great, right? But with those bigger paychecks come even bigger responsibilities. It can seriously feel like a financial free-for-all. So today, we're going to slice through all that chaos with a clear, actionable playbook to make this your most powerful financial decade yet. You know, if you ever feel like your bank account is some kind of financial pinata, just getting whacked from every direction, you are definitely not alone. One minute you're celebrating a raise, and the next you're staring down a mortgage, maybe some future college costs, and a retirement account that's basically screaming for attention. Look, it's a lot, but here's the thing. The decisions you make in this decade will absolutely set the course for the rest of your financial life. All right, so here's the game plan for today. We're going to start by really understanding why your 30s are such a make-or-break crossroads. Then we'll dive into building a defensive fortress for your money. After that, we'll switch gears and go on the offensive to grow your wealth. Then we'll cover how to protect everything you've built. And finally, we'll get to the ultimate milestone that really brings it all together.
Let's just start with the big picture here. Your 20s might have been for, figuring things out, maybe making a few mistakes. But your 30s? That's when the clock really starts ticking. The financial choices you're making right now will have consequences that are going to compound, for better or for worse, for the next 30 or 40 years.
And this financial pinata thing, it is the perfect way to describe this decade. Your income is probably higher than it's ever been, but so are the demands on every single dollar. We're talking down payments, car loans, maybe still some student debt, childcare costs, retirement savings. They're all fighting for the same money. And without a solid plan, you just end up playing financial whack-a-mole, which is, let's be honest, a super stressful and inefficient way to live.
Okay, so how do we handle this financial pinata? We start by building a fortress. And listen, this isn't about getting rich quick. This is about creating a rock-solid foundation that can handle whatever life throws at you, so you can build wealth from a position of strength, not from a place of panic.
All right, this fortress of yours, it's built on 3 super important pillars. First, we got to get rid of that high-interest consumer debt. Second, we need to achieve an excellent credit score. And third, we have to build an emergency fund that is truly bulletproof for the kinds of things that happen in your 30s. We're going to break down each one of these, step by step.
So let's talk about debt, because what we're really talking about here is opportunity cost. Let's say you have, $400 a month in credit card payments and a $600 car payment. That's $1,000 a month. Over 10 years, that's $120,000 of your hard-earned money that went to making banks and lenders wealthy. And that's not even counting the growth that money could have had if you'd invested it instead. Consumer debt is financial quicksand. It is slowly but surely sinking your ability to build a future.
Okay, pillar number 2, your credit score. And look, we're not just shooting for good anymore. In your 30s, the real target is excellent. We're talking a score of 800 or higher. So why the high bar? Why push for 800 plus? Because this one number pretty much dictates how much you'll pay for the biggest purchases of your life, and the difference is, well, it's staggering.
Okay, check this out, because this is where it gets real. On a $400,000 home loan, the difference between an excellent score getting you a 6.5% rate and a good score getting you a 7.0% rate is almost $47,000 in extra interest over the life of that loan. I mean, think about that. That's a new car, a huge chunk of a college fund, just gone, for no other reason than a slightly lower credit score.
And this just drives the point home, right? It shows how fragile that score can be. According to data from LendingTree, just one single payment that's more than 30 days late can torpedo your credit score by as much as 180 points. I mean, can you imagine going from a 780 down to a 600 because you forgot one credit card bill? That one little mistake doesn't just sting, it creates these financial ripple effects for years and years.
And that brings us to the final pillar of our fortress, the emergency fund. Now, back in your 20s, maybe 3 to 6 months of expenses felt safe. But your 30s, it's a whole different ballgame. The potential emergencies just get bigger and more expensive. The water heater explodes, a kid needs braces, an aging parent needs help. The goal now is a much bigger cushion, 6 to 12 months of your living expenses, sitting safe in a high-yield savings account. This isn't just about security. It's about having options. It's about being able to sleep at night.
All right, our fortress is built, the defenses are up, now it's time to go on offense. This is the fun part. This is where we shift from just protecting what we have to aggressively building the wealth that's going to fund the rest of our lives. Let's get into it.
So this is probably one of the most important numbers for you to remember from this whole discussion. By the time you turn 40, a fantastic goal is to have 3 times your annual salary saved for retirement. So if you make $80,000 a year, you're shooting for about $240,000 in your retirement accounts. And this isn't just some random number. It's the amount you need to really unleash the power of compound interest for the next 25 years.
And this chart right here, this shows you exactly why that savings rate matters so much. The difference between saving 10% of your income and 15% might not feel that huge in your monthly budget, but you compound that over 25 years and it is absolutely massive. It is quite literally the difference between a comfortable retirement and having to work until you're 75.
Okay, but there's this one huge enemy to your wealth building plan. It's called lifestyle creep, or lifestyle inflation. It's that supernatural tendency for your spending to just rise right along with your income. It's kind of like pouring water into a bucket that has holes in the bottom. You're working harder, you're earning more, but you're not getting any closer to your actual goals.
So how do you fight this? How do you actually build up an immunity? The secret weapon is automation. And the strategy is so simple, but it is so effective. Every single time you get a raise or a bonus, before you even have a chance to get used to that money, you immediately automate at least half of that increase straight into your savings and investments. Your future self gets a massive leg up, and your current self gets to enjoy the other half completely guilt-free. It's a win-win.
All right, so building wealth is one thing, but protecting it? That's a whole other ballgame. This next part is all about the milestones that people often forget about, but they are absolutely essential for protecting everything you've worked so hard for yourself and for your family.
You know, a really simple way to think about a complete financial plan is with this acronym, BRTT. It covers all the bases. You need a plan for budgeting and saving, that's your cash flow. R is for retirement, your future. E is for estate planning, your legacy. T is for tax planning, keeping more of your money. And the last T is for tracking your progress. Seeing it all laid out like this really shows you how all the pieces have to fit together. And honestly, this might be the point where hiring a professional financial planner just makes a ton of sense.
And inside that big plan, there are 3 things that are just non-negotiable. First, a basic estate plan. That means having a will, a power of attorney, so you get to decide what happens if you can't. Second, you need adequate insurance, specifically term life and disability insurance to protect your income. And third, something most people don't think about in financial terms, investing in your health.
Yo, this is fascinating. We have to start thinking about our health as our #1 financial asset. The average American spends over $300,000 on healthcare in their lifetime. By just investing in preventative care, eating well, exercising now, you could potentially save $60,000 or even more over your lifetime. And that's not even counting the lost income from sick days or just the simple massive improvement in your quality of life.
Okay, so we've covered defense, we've covered offense, we've covered how to protect it all. But there is one last milestone, and it's not a dollar amount, it's not a percentage, it's the one thing that all of these other goals are really designed to build.
And here it is. The ultimate goal, the thing that ties everything together, is financial confidence. This is that feeling you get when you actually understand your money. You have systems in place that you trust, and you can make big decisions without second-guessing yourself or totally panicking every time the market has a bad day. It is all about being in control.
And this is what it really boils down to, isn't it? Financial confidence is the real-world peace of mind that comes from knowing you can handle whatever comes your way. It's the difference between lying awake at 3 in the morning stressing about money and sleeping soundly because you know you have a plan, you understand it, and it's working.
So I want to leave you with this one question. We've covered a ton of ground today, from debt and credit scores all the way to retirement goals. But progress always starts with just a single step. So looking back at everything we've talked about, what is the one action, big or small, that you can take this week to start building your own financial confidence? Whatever it is, the most important thing you can do is just start.